Good afternoon, this is Clark Neighbors with the market commentary for BIS Commodities on the week ending July 1st, 2016. Very interesting week, very interesting month. Now a few details. Yesterday was the June 30th stocks in all positions and planted acreage report. A few highlights. In generalities, stocks came in quite a bit higher on corn, somewhat higher in beans, so the stocks numbers in general were a little bearish. A little surprise in the corn acreage was bigger than the March intentions, and the bean planted acreage number was not quite as big as what many in the trade had been whispering about. Many had talked about a 2 million acreage increase in soybeans. Came in at about 1.4, thus it gave the bean market, at least on Thursday, a big upswing in the market. Now for the week, corn is down 28 cents. At the same time, beans closed roughly 55 higher, and at the same time, wheat for the last week is down 40 cents. If you back up and look at the month of June, just to compare, corn down 44 cents, wheat down 36 cents, making new contract highs, by the way, in the wheat. And Kansas City wheat seeing the lowest level since 2006. At the same time, soybeans up basically $1 for the month of June. So with that type of parameters, what we've seen is a huge change in the ratios, and that really accelerated yesterday on Thursday with the stocks report. Now that bean corn price ratio is something over 3.1 to 1. Not sure that's a record, but that is historically very, very high, thus setting the bar going down the road. If you're in South America or somewhere else in the world, you're going to do all you can to plant more soybeans. Wheat on the other side of the coin, first start on that, kind of the negative side, we're starting to hear about wheat being fed here in the U.S. In many cases, it's price competitive or a price advantage versus corn and other feed grains. That could have an issue on corn feedings for this final quarter of the year, maybe the first quarter of next year. Corn exports, though, have been very good the last few months. We continue to see good loadings or good exports on a week-to-week basis as far as moving bushels out. That's creating some logistical issues in some locations, St. Louis being one, and obviously causing higher freight values with barge freight. We also continue to see very good soybean exports, and much of this uptick in soybeans could be attributed to the recent solid export numbers. We have about 250 million bushels of sold soybeans that need to be shipped for the old crop. Now, many of those presumably will get rolled into the new crop. We've been averaging about 10 million bushels per week as far as shipments, and obviously with 250 million in inventory on sales, that's going to be difficult to do, so we should see a fair amount of those shift into new crop. But there is a good booking of soybeans going forward, which seems to be an issue that will keep the soybean market tight, at least in the short term, and obviously keep soybean spreads fairly tight. Corn spreads, wheat spreads on the other side, especially after yesterday's report with wheat hitting new highs and corn looking fairly lofty as far as stocks going forward. We're starting to see those carries build out. Now keep in mind, 2 weeks ago today, corn hit its contract high, basically at $4.49, so we're almost 85 cents off that contract high in the last 10 trading days. Corn stocks, kind of an interesting dynamic there too. Just a couple notes again from yesterday. The corn stocks in the West are up 19% from a year ago, and I believe Iowa and Minnesota alone hold almost 275 million more bushels of corn today than a year ago at this time. Now the Eastern Corn Belt's down about 14-15%. Keep in mind the crop last fall was not quite as good in the East. Thus you continue to see, and this has been going all year long, the need to pull bushels from the West to the East. Big picture though on the corn carry out, Looks like, unless we have some weather issues in the next few weeks on this current crop, that supply should be something north of 16 billion bushel, counting the carry in, and also with production. That should then make it difficult for corn carry out to next year drop below 2 billion bushels, which is going to make it difficult to rally the corn market very much going forward. We'll see. A lot of water to go under the bridge yet. At the same point, you have bean carryout numbers all over the board because of this export trade, and that is going to be the volatile market to watch going forward. Cattle market this week was fairly quiet. Cash traded a little better. Futures continue to kind of chop in a recent trading range, but seem to maybe have hit a recent or seasonal low. We'll see if that's the case going forward. As far as the week coming up, we do not trade again until 8:30 a.m. Tuesday morning, keep in mind. So you get a long weekend now and 3 days of mini weather maps to go through at that time. So weather will be key, as it always is this time of year. There is anticipation of some pretty heavy rains, maybe heavy storms, if you will, through Missouri, southern Illinois, on into Indiana and up the Ohio River Valley. That will bear watching, and keep in mind those are some areas that could use some showers or could use some rains to stabilize, if not improve, the crops. The next crop report will be July 12th. We get a supply and demand update, which should calculate in some of the stocks numbers we saw this previous report this week. In essence, we hope everyone has a wonderful 4th of July holiday weekend. And again, this is Clark Neighbors with BIS Commodities. Feel free to call us at 800-373-2525 or catch us on the web at biscommodities.com. Have a great weekend.